Aaron Kennedy here today with Evan New. We're doing Tech Teardown for Friday, March 28th. Earlier this week, social networking giant Facebook announced that it would be acquiring Oculus VR, a small company that has been developing a new immersive virtual reality platform. How much is Facebook paying, and what's it paying for? What's it getting?
So Facebook has agreed to pay about $2 billion. That consists of $400 million in cash, and the rest is stock. And on top of that, there's another $300 million that's possible as like a bonus earn-out based on performance and milestones, hitting certain targets in the future. Oculus Rift which is their main product that they've been developing, has garnered a lot of attention over the past couple of years. It was kickstarted back in 2012. They raised $2.5 million, which was 10 times the original goal. So I think it shows that there's a lot of interest around this type of virtual reality technology. And they've been developing this. This hasn't actually launched yet, but this acquisition is not going to affect the launch timing, which is expected later this year. Mark Zuckerberg says that while today the biggest platform is easily mobile, he sees that thinks that in the future, Oculus could be the beginning of creating this new social platform of tomorrow. It sounds very dramatic.
So you mentioned the Kickstarter, and you say that suggests a lot of interest. I did a little internet searching earlier, and
Googling.
I did some Googling, and I found the pictures of people using Oculus VR all seemed like they were a pretty concentrated niche market of people. And so how do you see that translating into a major social platform?
I would totally agree with that, because it is very much like this niche idea, because not everyone wants to wear this thing on their head.
It's literally a big thing.
Right, it's a big box that you sit on the top
like,
of your face.
Really?
So, I think that's a lot of what Facebook investors are wondering right now, because when this deal was announced, shares immediately kind of dipped a little bit. So I think there's some skepticism, like, why are you buying this? How does this play into your social business? And in general, I think the virtual reality stuff is kind of picking up steam. Sony just announced what Microsoft is rumored to be working on one for their console, or their gaming consoles. Right. But at the same time, again, it's like, how do you roll this out? And Zuckerberg, notes that he thinks that, while gaming is where it's at right now, he kind of sees these visions in the future where virtual reality and augmented reality can kind of drive computing in the future. He has all these examples on the conference call he mentions about just everyday kind of stuff. But are you going to wear these things on you?
Yeah, I'm just trying to picture someone walking around wearing these, or just like hanging out watching TV, and you've got your giant box on your face.
And he says it's like, it feels like you're in another place with other people, which is like kind of how he was bringing it back to the social element. But he's pretty interested. He's so interested in this technology that I think they put this deal together in about a week. Like, that's what all the reports are saying, that this happened really quickly. And one of the venture capitalists that had backed Oculus kind of made this really big analogy. Obviously the VCs are going to make a ton of money anyways on this deal.
Right.
But they compared it to Google buying Android in 2005. Now that's a pretty tall order to fill when you start making comparisons.
That's some big talk, yeah.
Right. So whether or not that can happen, we'll see.
I've seen it suggested in some places that Facebook bought it just so no one else could. What do you make of that? I'm
sure that there's been, I wouldn't be surprised that there are other people that are interested in this company because they've gotten so much attention. This also seems like the kind of stuff that Google would probably be interested in. We haven't heard any reports on whether or not Google made a bid or anything.
But it does. From the outset, it looks like a Google-esque venture.
Right. Google does all sorts of crazy acquisitions, and this is kind of a crazy acquisition. And Facebook has been doing more of these. This is just the third of the major acquisitions they've done. But yeah, I think there is some optionality here to what if this actually does blow up?
So the deal is mostly stock, just like Facebook did with the WhatsApp acquisition. What are some of the implications for shareholders in Facebook when they're issuing stock? So
kind of like we had mentioned when we talked about WhatsApp, is that whenever a company uses their stock as currency in M&A deals, it's effectively hedging future risk and reward associated with the deal and sharing that with whoever you're giving the stock to. But right now, I think the most immediate concern is the dilution that's going to be happening. So right now, Facebook currently has about 2.5 billion shares outstanding, including Class A and B shares. And for WhatsApp, which is a much bigger deal, they're issuing 184 million shares. And for this deal, they're issuing 23.1 million shares. So combined, we're talking about 207 million shares between both of these deals. So once these deals complete and go through all the process, that's 8% dilution that we're talking about in just a matter of months. So if you're an existing shareholder, that's bad news.
Well, so do you think this Oculus deal makes sense for Facebook in the long run? Do you see a product coming out, maybe Facebox? I don't know.
Face Rift.
Face Rift.
I think it has a potential to work out, but it's by no means a sure bet because there's going to be all these harder it's much harder to see this becoming this mainstream adoption type thing, which is kind of key to it becoming a larger social platform that Facebook's kind of envisioning it. It's a little bit tough to see, but at the same time, $2 billion isn't going to break the bank for Facebook, so they can afford to take these types of risks. I mean, the WhatsApp deal, it was like $19 billion, so that's much harder to work out financially in the long run. But this one's a little bit cheaper, so even though it probably has less of a chance of success, it also costs a lot less.
So if you're a Facebook shareholder, are you neutral, okay with this? Are you excited?
I'd be kind of neutral. It's kind of like when Facebook tests out new, smaller products. I think the WhatsApp deal has much broader implications that are much more directly tied to the social business. Whereas this is kind of going to be one of those long shot bets, kind of like what Google does, with these little
the moonshots, yeah.
Yeah, they just bought robotics companies, stuff like that. So it's kind of the same thing in the sense that it's just like one of those long shot acquisitions that might pay off huge in the future, but it might not.
All right. This week, King, maker of the smash hit Candy Crush Saga, went public at $22.50 per share. This was a widely anticipated IPO, yet shares immediately pulled back. What's going on? Do you think people are just tired of the overheated internet IPO market?
I think so, especially when it comes to social, game makers using the freemium model, which, there's been a lot of inevitable comparisons to Zynga, which isn't really a good thing if you look at Zynga's performance from their IPO in 2011 to now. Both companies, had these really big freemium games that put up these crazy revenue growth numbers, which attracted investors' interest in the first place. And they both IPO'd around $7 billion valuations. King actually priced a little bit cheaper based on the valuation ratios with how much sales they were doing relative to what Zynga was at the time. Right now, shares are trading about 20% lower than where they IPO'd, and it's only been like 3 days, so there's clearly a lot of skepticism around the long-term viability of freemium game makers like King, and I think that's ultimately justified and a good thing.
So I'm getting the impression that you don't think Candy Crush Saga is going to be a classic played for decades to come.
Decades is a pretty long time. I don't think, not sure if
you
people
don't see staying power with Candy Crush Saga.
I mean, in general, not many games, especially on these mobile platforms, have that kind of staying power that you see in kind of other
What
areas
prevents
of games.
that?
I think it's just because people have shorter attention spans. Because on mobile, it's much more of a casual experience. So inherently, you're just going to be more topically, playing for 5-10 minutes at a time. Whereas, some of the other more engaging platforms like console gaming, you sit down for hours on end.
Hours on end?
I mean, some people will sit there for
some people, but not you.
Oh, of course.
No.
But I mean, there's very limited examples of games that have done really well and be kind of expanded into these valuable IP franchises. I think Angry Birds is probably one that's come to mind. They've kind of been able to expand into different genres. A lot of sequels that they've been able to actually reinvigorate and keep people interested, even though it's more or less the same mechanics.
Plus product lines.
Right. They also
merchandising,
like shirts and shoes and keychains, all that stuff. I'm sure they get a bunch of licensing revenue on that. But I mean, these companies in particular, like King and Zynga, they face crazy risks with their product portfolios because they're so concentrated and reliant on such a few number of games. So its top 3 hits are Candy Crush Saga, Pet Rescue Saga, and Farm Hero Saga, and they're all basically the same game.
Did you just say Pet Rescue Saga?
Yes, Pet
That's
Rescue.
a thing.
Yes,
okay.
It's a saga. Farm Hero Saga. I mean, they're
I'm sensing a pattern.
They're all the same.
A little repetitive.
And they're all like, the grid-based puzzle where you match up things.
Right.
And I mean, those 3 games were 95% of bookings last quarter. Candy Crush alone was 78% of gross bookings. So, I mean, you have so much writing on these games, and I mean, they want to diversify and expand into new titles, but we don't know if they can actually do that. Kind of like same thing with Zynga. It's like Zynga has Farmville and all their kind of go-to things.
We keep mentioning Zynga on obvious comparison. I'm getting the impression you are not a fan of the freemium model. This is not a thing you're into.
I think that on an individual level with like a very specific game, you can do really well if you execute and you just get lucky and But as far as I don't think any company has shown a sustained ability to actually do that on a consistent basis and release game after game after game that uses freemium, makes a ton of money, and they can keep making because obviously from an investor standpoint, you want a long-term business that can sustain revenue, recurring revenue, whereas all these companies, they seem to be very reliant on these like 1 or 2 hits. They try to milk them as long as they can, but eventually I think it's going to dry up.
All right. After years of speculation, Microsoft has finally brought Office to the iPad. The move was announced Thursday in line with previous rumors. Is this everything you dreamed it would be? Are you really excited? I know you've been trying it out.
So I tested out the iPad versions, downloaded them since we have Office 365 subscriptions here, and it's pretty much what you expect from Word. It's a pretty good experience. The move has been a long time coming, and I think it's arguably one of the most important strategic shifts that Microsoft has done in mobile in a really long time. Tablets are inherently just a much better form factor for actually productivity uses than like a phone, because they've had Office on the iPhone,
right,
but
course.
no one's going to really get stuff done on their phone. And that's why the Office for the iPhone is kind of uneventful. But I think on tablets, it's a much bigger deal. And there's obviously a lot of pent-up demand for Office on the iPad specifically, because right now, if you look at the Apple's App Store, Word, Excel, and PowerPoint are the top 3 free downloads right now. So they've already jumped to the top of the charts because people have been waiting for this for years.
So it sounds to me like, to you, this is a win-win for Microsoft and Apple.
I think so. I think it definitely is because, well, first off, Apple's going to get its standard 30% cut of any subscriptions that are sold within the app through in-app purchases. You can still buy them outside of it, but anything you buy within the app, Apple gets a little cut.
So would you say this is all upside for Apple? Because all Apple had to do is say, sure, come on into the App Store, do it.
Oh yeah, I mean, I'm sure Apple's wanted it for a long time, but I think Microsoft is the one that really didn't want to do it because I think that 30% cut was part of what was holding Steve Ballmer back, who was kind of just resistant to giving Apple things that.
But Steve Ballmer's not there anymore.
Exactly. So I mean, Satya Nadella seems to be a lot more willing to make these types of strategic concessions if it makes the case for a longer-term gain in the future. And I think that this can really potentially meaningfully drive Office 365 subscriptions, particularly within the enterprise, because I mean there's such a big overlap with enterprise users, productivity, and tablets in the iPad that it's just a natural overlap that I think Microsoft needs to be addressing. And the benefits will also probably come with new subscribers, retention, probably get people. It just drives the value proposition of actually paying the subscription fee because you get a lot more out of it now.
So Microsoft confirmed that it's also working on Office for Android tablets. It really seems like Microsoft is broadening its horizons here. Do you see any possible downsides for Microsoft in this?
Well, I think that historically they've always been like tried to as much as possible keep it on their own platform. So obviously they've always had other platform support also, but especially when it comes to mobile, very specifically, they've been very resistant to give iOS or Android anything. But
they're also late to the mobile party generally.
Right, and I mean Office has been the dominant force in productivity software for decades, and with no sign of that changing, except recently with mobile becoming so important, and Microsoft and Office have not really done well in mobile. So it's like you need to get Office on mobile in a big way to kind of keep that status of the gold standard. And I think that that's exactly what they're going to be doing, because I mean you can't expect Microsoft to only allow Office on mobile, because then you're basically artificially limiting your market share. Because I mean, Windows was like 2% of the tab market in 2013. With iOS and Android, it literally was the other 98%. So I mean, you can't just hold yourself back. It's kind of a short-sighted move to not embrace these platforms that are clearly dominating this new trend in technology. So I think that it's also kind of like a humble admission that from Microsoft that inevitably have to embrace iOS and Android. But I think that's ultimately good for Office as a business.
Struggling smartphone maker BlackBerry released its latest earnings results Friday morning. Shares have given up most of their early morning gains, though. How did the numbers come in? It seems like people were excited. Now they're not.
Numbers pretty bad, but I think that's pretty much expected.
Wait, you're saying BlackBerry reported a bad quarter?
I know.
Whoa, slow down.
Just wait to see how bad it actually is. So revenue fell below the $1 billion threshold. It was down 64% year over year.
Oh my God.
Part of that revenue is being hurt because they're basically just selling out of their inventory channel. So they're not recognizing revenue on all the devices that are actually being sold because they're just kind of winding channel inventory down. People still aren't buying BB10 devices. Over 2/3 of phones sold through to end customers were these older BB7 devices. Had a net loss of about $423 million, or 80 cents a share. I mean, there's a couple good things.
Well, that all sounds pretty grim, actually. I would argue with you on that. But shares did have a brief positive reaction this morning. So obviously there's got to be some kind of positive investors are focusing on, right?
Well, I think that the net loss on an adjusted basis was smaller than expected. So of course they lost money, but lost a little bit better, less than people thought they were going to. But there were a couple of good things. They still have $2.7 billion in cash on the books. People have been kind of worried about their cash burning. They have been really they're ahead of schedule on winding down some of their operating expenses. So with these cost cuts, they're making some progress there. And we talked a little bit about their channel inventory reductions, which is also a good thing because that reduces their inventory risk going forward. BBM is holding up decently. So BBM now has 85 million monthly active users, which is a little bit higher than the last time they gave us some official updates. So there's still a pretty decent user base there.
And BBN is one of the things they're staking their future on.
They're hoping to, at least.
Yeah.
The CEO John Chen has reaffirmed that BlackBerry is still going to be focusing on hardware on the handset side of it, primarily with hardware keyboard enthusiasts, which is kind of what they not too unexpected there. They're going to be planning launching 3 high-end devices targeting the keyboard enthusiasts over the next 18 months. But I think the biggest challenge here is they just can't let go of the past because BB7 is still outselling BB10 in a big way. Like this aging BB7 powered Bold, which I think was launched in 2011, is still selling really well, which, I mean, sure, that's nice that something's selling well. But, I mean, they've been trying to transition to this new platform, and the consumers are starting having it. And they're actually going to be starting a new production run of the Bold because it's still so popular, even though it's so old. But for a company like BlackBerry that wants to move on to the future, they built this new platform. They spent years and years and hundreds of millions. I mean, you want to get on the new platform, but people don't want to do it. But I mean, they have been making progress with the turnaround and some of the financial aspects. But it's just one of those catch-22s where companies in turnaround mode, they need to cut operating costs. But then inevitably you end up cutting R&D expenses, which kind of limits your ability to innovate, come up with new phones, new features, your future pipeline.
Right.
So it's kind of a tough place.
Well, so BlackBerry was one of the leaders in starting the whole smartphone and I would argue mobile revolution that we've seen in the last decade or so. But BlackBerry hasn't. It's like they charged ahead and then couldn't keep up with everyone else. They ended up being usurped by other major mobile names like Apple and Google. Do you like BlackBerry as a company? Do you have any interest in BlackBerry shares?
No. I mean, they just made so many mistakes over the years. I mean, we're talking about from when, if we look at the iPhone 2007, over the past 7 years, they've just made so many mistakes over and over and over again. And a lot of that was the co-CEOs that used to run the company just missing out on all these important things and just not really acknowledging how big these threats were. And then, the most recent previous CEO, Thorsten Heinz, he also didn't have a lot of he wasn't a very good leader in my opinion because he also just kind of more or less went along the same path with some differences in terms of what he thought the company should do.
So you have no faith in John Chen. John Chen cannot turn this boat around.
I know that John Chen's big thing is he did a turnaround in the past, but that's a totally different business. Not totally, but very different in a lot of ways, but there are some similarities. But just because an executive has been able to successfully turn around another company in the past doesn't mean it's going to be a sure bet this time. And I know that he's been kind of banking on this perception that he can do it because he's done it before. But I think that he's inheriting a much worse situation than he did. So I'm not too sure about this one.
All right. That's all for today on Tech Teardown. For Evan New, I'm Erin Kennedy, and we'll see you next time.